Welcome, welcome, welcome. Welcome back to another edition of Forex Tech Magazine. It's your host, Lewis. Today is December the 27th. Wow, 2018. Doggone it. Time is going by fast. So if you haven't made any money this month, well, you're probably not going to make any. This month's done. It's dead. It's toast. It's out of here. No, I'm joking. Still got time to make a little something, something. But you got to get in pretty quick. Before we get too far into this today, let's go ahead and get into our disclaimer. Disclaimer goes a little something like this. Any and all information given to you by Forex Tech Magazine should be considered to be educational and for entertainment purposes only. If you're in need or you're seeking financial advice, then our suggestion to you would be to seek out the assistance of a licensed, competent financial advisor. With that being said, let's jump right into why you came here today, which is let's look at some trades. First up on the trade agenda, let's look at the one trade that we're still in. It's the last trade we made for 2018, and that is the Great Britain pound New Zealand dollar. And as you see here, looking at our fib information, this is the pair that has been making a Fibonacci sequence, and here goes our A, here goes our B, this is our C, and then we got in right about here, right? And right now we're looking for our D, which would be all the way up here, right? And we're slowly making our way to that rendezvous take profit point, right? But right now at the moment we're here now. This is where we're at Monday, Christmas Eve. Made some pretty good traction on the way up there. It was bouncing off of the 38.2, so that was a pretty aggressive move, but unfortunately it lost a lot of steam right after the on Christmas Eve, and then it began to pull back. It's been pulling back ever since, and then today it started to push and make its way back up. So optimistic that we're still going to hit our target point. Just going to may take us a little bit longer to be able to get there. Had hoped to hit it by today, but now we're looking at maybe by Friday, if not, going into the new year. But we'll see. So right now, our captured 147, 146 pips, and right now the money is being made on that. If we close out that account today, would be $982.59. So still profitable, still making money, which is good, and it's just a standard lot. We're not trading like 2 standard lots or 3 standard lots. So a standard lot is what, $10 a pip. In this particular case, because there is a difference between the bid and the ask, that spread is what's causing the difference as far as what you see in between what the amount of pips that we won and the actual amount of money that we could potentially take from this trade. Okay. What's the other thing to be looking for and be cautious about? There's a lot of exotic pairs out there, and there's a lot of pips to be made from these exotic pairs, but there's also a spread between these pairs as far as the pips from, so what you can generate as far as the term of pips and the amount that you actually make. You're going to see a difference just because that spread is so wide between the two. So it's one of the things that you got to factor in when you're looking at trading currency pairs, and also looking at your take profit and your stop losses. You're trying to calculate that risk to reward ratio. Okay. So let's get out of here. Let's go look at Great Britain pound, Canadian dollar. This right here looks kind of busy, I know. But trust me, it's not as busy as it seems. This one right here got a couple things going on. One, we have the Fibonacci sequence on, and then we got some trend lines, and then we got some support resistance lines here on the screen. The main thing to take away is that price is still moving in an upward trend, even though it did break the trend line here previously. And then it proceeded to move back up again along the trend line itself. One thing that I was looking at, I pulled in this downward trend line up here, just because we got close to resistance, and I want to see if price was maybe getting ready to start making a U-turn, and maybe we should be drawing our Fibonacci lines going here in this opposite direction. Instead of going up, we should be driving them going down. And No, I think we're still good to go. Just looking at this. I think this right here is more or less just a Gartley that occurred. And if you guys know about Gartleys, I mean, it's just like a little mini wave that's from the B to the C that happens in the overall price movement. And as you can see, that's what happened here. The price went down, spiked back up, came to the red, and then it had its completion right here. So that lets you know that, yeah, price was on its way back up, which it was. The price continued to still move up. Now, one thing you don't want to do is you don't want to overcomplicate a trade. You definitely don't want to confuse yourself, and you definitely don't want to be trading in the opposite direction when on a trade when you should be trading in the direction of the trend. So always find what your overall trend is going, and make sure you trade in that direction. And then, like I said before, you find these minor pullbacks and stuff, and sometimes you get these U-turns or whatever. The main thing, if you're looking at something where it's going to be a U-turn, you should be able to put a trend line in place. Showing you that price is starting to make that move in the opposite direction, and then that's when you want to get in. Don't try to just go out there and eyeball it or try to just guess it. 9 times out of 10, you're probably going to wind up being wrong if you're doing that. Okay. This particular trade here, probably won't be, probably not a trade, to be honest with you, that you want to be in at the moment. So price pulls back. So this is our A, this is our B, this is the pullback to C. As you can see, price has crossed over into the buy zone. And it's bouncing off of a trend line, so that's even more of a indication to buy. The only reason why I probably won't buy is because that puts us up here, what, about 70, 175, 40. Only reason why I probably won't buy with this one right here is just because price on this particular pair is moving sideways, right? And as you can see, we're kind of at the extreme of that sideways move, right? You can see here goes resistance, 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 and then where we are right now, resistance, and we're right here, right? And based off of what we were just looking at, it's telling me the price is supposed to be somewhere up in here. It's supposed to be a take profit. Now, it could very well be, and if you notice here, this was a previous, looks like a resistance area before here in the past, so it's definitely, it could be, right? Not saying that it's not, but I'm saying that be cautious about trying to take a trade up into this area right here, right? When you're thinking about like space travel or something like that, the farther out of the atmosphere you go, the thinner the oxygen becomes, and the more likely you're gonna pass out. And same thing, the farther up we go, thinner the buyers become, and we might pass out. So I don't know. I know that there's a vote going around next week. I think something with the Great Britain pound. So maybe a reason why we're getting some push right now, or maybe it's a week after. I can't remember, but. Just be kind of cautious as far as being aggressive with these pairs. Even the trade I got on right now, to be honest with you, if I hadn't had that trade on already, I probably wouldn't be trying to get into that trade at the moment, just because we want to be cautious going into the new year and what's going to be going on and with that new trading environment, especially if there's a vote going out. What we want to do is kind of take a wait and see approach. Let some of this news kind of get processed into the market, and then that way, once the news kind of gets in and everything gets settled, then we kind of get in there and jump on whatever direction the market is going. Once again, our goal is not to try to anticipate what direction the market is going to go. Our goal is just to take advantage of whatever direction the market is going to go. Okay? So with that being said, yeah, it's possible that this could be it right here, right? Just be careful, reaching for it. That's all. Just be careful. He's got another resistance line right here. It has to crash through before it even hits that point. So typically what I normally do is I'll buy once you cross over that buy zone, but what's right here, you may want to wait until after you get past this resistance level here. Once it clears that, pushes up, and then comes back down, probably create another buy zone, then maybe get in after that. Be my best recommendation. And then also too, you want to look at your risk reward ratio, because once again, we start our initial risk off below the A, right? It's 273 pips. And you got to ask yourself, 273 pips risk to get $324 pips, and that's just now. That's not including or counting if we, wait till we get up here before we go into a buy. So 274 to get 324. I mean, right now, yeah, we could do it. Going forward though, don't know. So just be careful, just be cautious. And just remember, there's always other trades out there on the table that you can trade. So, always look for them, right? What else is out there? Here's another one. It's a Great Britain Pound, Japanese Yen. Obviously in downward trend. This is the Fibonacci sequence going down. And I told you last time, probably put my stop loss or put my take profit right here at this support zone. And as we predicted, price came down to the support, bounced back up. That's why I was saying be cautious on the other one going towards resistance. So same thing here, we'll come in. It's like it's in the sell zone. I come in, put my trend line in, see where we at. There, that should be. All right, that's kind of weak, but whatever. Price came back through, so that lets me know it's time to sell. Start selling. Price went back up. You can put another one right here. Price selling. Definitely a sell zone. You can either sell to the support or try to sell to the fib. Probably still just sell to support. Once it breaks support and push it back up, try to retrace support. Then I'll probably put in target to the fib. This is a little bit of a complicated one. And this could be just meaning that price is kind of winding down on this move and is getting ready to start making a move in a different direction. This is one to watch and one to use caution with, as usual. And then this next one right here is the Great Britain Pound, Australian dollar. We already hit our price target, which is this green line here, and we hit this a couple of days ago. And so price started making a new Fibonacci retracement. And as you can see here, this is our A, this is our B, this is our C, or this was our C, all right? And it was in the red, so price was moving up to the red, but then what happened was price was on its way up, and then price had a massive pullback, right? Still in the red, all right? We had to wait till price got back on the buy side of things, which now it is, right? So price is moving back up again, all right? And it's like it's pulling back a little bit here. And so, is an opportunity for us to get in, or we can wait until, price makes another move, starts to make another move up, and then we get in there. This is one of those ones we'll probably kind of wait and see. Once again, it's at the end of the year. Price is kind of doing a lot of different things. And I will tell you, there is some strength going into the Aussie dollar. So once again, it's one of the ones you want to kind of be careful with. And I think people are predicting that the Aussie dollar is going to make this turnaround going into 2018. I think, that's what it looks like it's going towards. Let's see here. We'll look at this. Okay, so pricing itself is on the buy side, on this side of things here for right now. This is the A, this is our B. Wait, and this is the C, this is the pullback. So price needs to push up at some point. So, I don't know, let's look at this one again. It could be that it gets completion. Definitely. We'll have to see. Just always remember though that if the price once price goes below the A, then this whole fifth sequence is out of the is out of here. It's no longer relevant. Right now we're still in the upper echelons of where it could bounce up and still continue to hit its price target. And right now you're just getting some pullback, and I think it's really just because the market is really kind of coming alive right now. Right after the holidays and everything, I think the market is just kind of getting to that point where people are starting to come back in, and still trying to get a feel as far as what's going on. Still a lot of thin trading out there. It's not like as heavy as it normally would be. So be cautious with it if you do decide to get into it. Here's the setup right here. I probably would wait. Won't want to buy when it's got a red candlestick going on, just because it could continue to go down, and it could continue to go down into the sell side of things, and then you'd be on for that ride. So I'd wait until you get a green candlestick while you're on this side of things, or I just want to get in right now. So what's the next one we got, which would be the Great Britain Pound US Dollar. Once again, it's another one that we got out of last week, and as you can see, we hit our price target, and then price began to go back down, and now it's right around that support resistance area, right? It's kind of playing around down here. There's potential for price to push back up, or it could even continue to go down because this is paired up with the US dollar, and because everything's going on in the US market right now, coupled along with what's happening over in the European market, with Britain and everything. This thing really has potential to pull either way. So here's another one I'd be very cautious about. When I first got into this one right here, it was bouncing off of the red Fibonacci single. I think it was bouncing off the 6.18, I think it was. But then the price pulled back and went back even lower to the 8.60, and so that's why we had to go back and adjust our take profit to reflect that. And I thank goodness we did, because if we still kept it at the other one, we wouldn't never hit it, and we'd be in for this ride right now. So far, it's not on the buy side of things, and so therefore, wouldn't necessarily recommend getting into this trade. Yeah, it's not really on the buy side. I mean, when we look at it when it's going on the buy side thing, what you're looking for is really like a all right. Whoops. So even though the candlesticks are on the buy side, what you're looking for is a bullish close, right? Something like an engulfing bull or something where it's a strong bullish close, letting you know that, hey, buyers coming back into this market. You got red candlesticks. I'm not getting in on a red. That'd be something I'll let somebody else do, right? Let's look at where this. So far, looks like it's pulled back to the blue, and I'd just be even double cautious and just go into the green on this one. So for me, even if we do get into this one, we're not looking at any more than right about here. We're pretty close to the A right now at the moment. That's 108 pips. So you'd be risking 46 pips to get 108 pips. Once again, it's not bad, but you know we'd have to wait till we get a positive green candlestick before we get in and try to make that move. Other than that, I'd sit on the sideline on this one right here and wouldn't risk anything. Just sit there and just let it kind of play out. You know, that's about it for that one. So, with that being said, it's going to be a short day today. It's like it's 3:22 right now. Just kind of give you that wrap up. The one that we're in right now. Great Britain pound is $1 We're still making our way up to our take profit, right, which is up here. And we're still a ways off. Let's see how many pips, probably 200 or something. So. Yeah, we're 254 pips off from where we need to be at, which that's fine. I mean, we're making our way up. It's slower than what I want it to be, but I'm okay with that. It's one of the things you got to deal with sometimes. You know what I mean? Look at the overall trend. That ain't it. Oh no, what's going on with my trend line? Let's see. Let's try this again. So overall trend, as you can see, is still going up, which is good. Let's thin this out. So overall trend is still going up, which is good. This is a little bit of a steeper trend line than, which basically means that price is moving a lot faster than the overall trend for over the last couple of trading sessions, which is good because it just means that it's moving fast, right? And then of course, this is up until December 24th, Christmas Eve, and then of course after that it's pulled back down. So now it started moving slower again, and you see it is moving a lot slower to get back up, but that's okay. These are always fun because it means a lot of energy going into the market. But when it gets over here, it just means that now you got a wider area for price to move. It can still continue to move up or continue to move back down towards this trend line. And it just takes a slower period of time for it to hit your price target. But anyway, we'll check this out. We'll keep an eye on it over the next 48 to 72 hours. And with anticipation that, we're going to hit that price target pretty soon. Anyway, guys, listen, that's it for me. Thanks for tuning in. Appreciate it. Appreciate showing all the love that you showed over the last couple of weeks while we've been here. Just keep in mind that come next week, we're going to start trading our other account, all right? Which is going to be great because it's going to be futures in that account. There's options in that account. There's options on futures on that account. There's options on currency pairs in that account. So we're still going to be trading currencies, but we're going to just be trading futures and options contracts on currency pairs. And the reason being, it gives us a little bit more flexibility than what we have in the spot market, especially when we start trading options on the currency pairs, because then we don't have to worry about margin calls. We don't have to worry about, all thing we got to worry about is just make sure that our timing is right? Meaning that if we're calling for a price to hit this time or hit this price here, it needs to do it within the time that we have that option purchased for. So if we got a 30-day option, it needs to hit this within that 30 days. If we have 60 or 90-day option, it needs to hit it within that time frame. So but that shouldn't be a problem because these considering the fact that we trade off an hour chart, typically, we hit our target within, a week or so of getting into a trade. I think 30 days would be like really the longest period of time, if that ever. So, but anyway, we're gonna start trading those, and hopefully you get something from it. Spot forex is it's pretty good trading, but I keep seeing the same comments over and over again in a lot of different places. Is that people have a hard time with some of these brokers and stuff with these spot forex trading, and I think a big part of it is just because the spot forex is an unregulated market, whereas if you trade in futures or options, that is a regulated market, and so therefore you got some oversight going on to help make sure that everything is a knock on wood, a fair playing field. And plus two, gives you the ability to take a really small account and give you the opportunity to blow it, not blow it up, but yeah, you could blow it up, but actually build it out, in my opinion anyway, a lot faster than you could if you just trade regular forex. Don't get me wrong, I think regular forex is great, and I think spot forex is great because here you got 100 different pairs that you can trade at any given time, so there's always a market available. Trading futures account is not necessarily so. There's only going to be about 5 or 6 pairs or 4 or 5 pairs that you can really trade at any given time, and so you got to be pretty creative, and you got to really look for the trades and the deals in there. But once again, I think for the dollar amount that you invest, there's a lot more opportunity in there. There's a lot of opportunity in there for you. So we're going to start doing that next week. Hope you tune in and enjoy it. Until then, I will see you next time in about another 23 hours. Take care and see you soon.